Now, the steel capacity shutdown in China has shifted the demand-supply math in favor of Indian steel makers and, in turn, graphite electrode makers in the country as well. To add to it, the higher share of steel production through electric arc furnace and the graphite electrode industry is in a very, very sweet spot. Joining us on the show today to talk about how sweet is this sweet spot is Ravi Jhunjhunwala, Chairman and Managing Director at HEG, a company that will benefit from this changing demand-supply dynamics. Good having you, Mr. Jhunjhunwala. Thanks so much for joining in. Now, what is known over the last 2 or 3 odd months is that the demand-supply dynamics for the graphite electrodes industry has improved. I believe the demand used to stay at 7 million tons per annum. Now the supply, because of the Chinese situation, has come off to 7 million tons per annum as well. Is this likely to be the driving factor over the course of the next 6 to 12 odd months, or could this change as well?
You see, nobody can predict the future, but it seems like a basic structural change. What has actually happened is, in the wake of the crackdown that the Chinese have been doing on some of the polluting industries, they've closed down about 120 to 140 million tons of what they call induction furnaces and some mini blast furnaces, which have been highly polluting. So what it has done is Chinese capacity to export steel has come down substantially. China was exporting about 120 million tons of steel to about 200 countries in the world, which is now likely to drop to somewhere in the region of 60 to 70 million tons. So that 50 million tons, which is now not being exported, is obviously being produced in those countries which were up till now importing. So that has added to the demand of electrodes. Secondly, China was also exporting a lot of billets, and to that extent, these countries were not able to produce their own billets. They were importing at dumping prices. So that has also substantially come down. And thirdly, in addition to the steel capacities which have been shut down in China, they've also closed about 30-35% of their electrode capacities. So obviously the demand has certainly shot up. It has taken everybody by surprise, including us. We never expected something like this to happen, and happen so quickly and so fast. So basically it's a structural change. I mean, it's anybody's guess if some of these capacities are able to come back in China or not able to come back. But for the time being, it seems that most of these capacities are gone forever. And we just recently heard in the last 24 hours that it was known, but we heard the action yesterday that we all live in Delhi, so we know what pollution is in the winter, and the winter 3-4 months are the worst period. So it was also already expected that they will have a second round of crackdown on in the winter months, where the pollution becomes even worse. So according to some reports which have been published yesterday, it seems that that has begun. And some of the areas where these capacities were still operational, they've cracked down on that, and so it is likely to close more capacities of steel, which in turn would mean less and less exports. And to that extent, a lot of these countries which were not able to operate their steel plants at optimum capacities are now able to do that. And it has happened at a time that the last 2-3 years for the electrode industry have not really been good. And following that, about 30, I would say 25 to 30% of the electrode capacities outside of China have also been closed because we didn't need those capacities anymore. So the electrode capacities have come down, and on the other hand, the electrode demand has certainly shot up. So obviously that has created a strong imbalance in demand supply, and that has led to the situation where we are today.
Mr. Jhunjhunwala, keeping with the theme that Neeraj introduced, the consolidation that you're seeing on the supply end, can you tell us how you're making the most of it? And I know it's difficult to explain how long this will last, but how is this changing your client profile, if any?
No, it is not changing our client profile. You see, we have been absolutely the last new entrant in this field about 40 years ago. So it's a technology-oriented industry, and so there have been no newcomers, let's say, in the last 41 years. And in the last about 20 years or so, India has become a fairly significant player. In fact, it would not be out of place to say that every incremental demand of electrodes anywhere in the world in the last about 15-20 years has been met by India, which basically means that in the last, let's say, 20 years, India has been expanding capacities for the electrodes, and our exports have been growing year after year. While the other 3-4 players, there are only 3-4 other graphite companies in the world, so they have actually shrunk their supplies. They have been shutting down their plants over the last 20 years. At the same time, India has been expanding. So it's fair to say that every incremental demand anywhere in the world has only been met by India. So obviously, we are a significant player, and any change which happens anywhere in the world has an impact on us, positive or negative, whatever it is.
What was your capacity, Mr. Jhunjhunwala? You had the excess capacity to be able to meet this shift in demand, and what are you operating at now in terms of capacity utilization?
We were operating at about 60-65% last year. This year we are likely to operate anywhere between 80 to 85%. And like electrodes, where technology is an issue, our major raw material, which is a petroleum-based raw material called the needle coke, coming out of some refineries, that's also a technology area where there are only 3 players in the world, one in US and 2 in Japan. So that landscape has also not changed. So over the last couple of years, the supplies of needle coke have become a little scarce because as the electrode industry was suffering, so was the needle coke industry. So they worked with some lithium-ion batteries in China's, and there has been some movement of needle coke to China from US and Japan, which has now found a new application in the lithium-ion batteries. So that has created some sort of a imbalance, I would say, just like we have in electrodes, where the needle coke supplies are in short compared to whatever we need. So that's the reason why more or less every one of us, let's say the 5-6 companies in the graphite in the world, none of us are able to operate at, let's say, 95 or 100%.
So you're essentially saying that there is only up to a point that you will be able to capitalize on this situation where capacities in, say, China are shutting down because your ability to ramp up may not be that significant because of these back-end linkages which you were just pointing out.
Yeah, exactly. And that is a situation with the entire graphite industry, not just alone HEG or other Indian company, but this more or less applies equally to everybody.
Yeah. A lot of your sales is shifted to now the spot market.
Talking about the capacity.
Go ahead, Mr. Jhunjhunwala.
You see, traditionally in this industry, there has been a tradition that some of the very large customers in the world, including India, have been buying on an annual basis. And those contracts are normally signed and agreed in the beginning of the year. So this year was exactly the same. And by that time, at least the graphite industry had no clue about what was to happen in the next 3-4 months. So going by that tradition, we and everybody else did sign some long-term contracts. And those tonnages, those shares of the long-term contract versus the short terms or the spot sales are coming down sequentially. So what I said yesterday in our investor call was in the first quarter of April, June, while practically 100% of our supplies went at old prices, it started coming down as we start dispatching more and more of the spot sales or the new price sales, as you call it. And over the next 2-3 quarters, our share of high-priced sales will keep increasing. And to that extent, obviously, the realization will be better. Our profitability should be better.
Okay, so actually that's the question that I wanted to ask you. On a 6-month basis, your reported numbers, your revenues have shown a 70% uptick. Now that is arguably also because of a low base. And I'm not even getting into EBITDA and PAT, but I just wanted to understand for the next 18 months, the next 6 months you'll have the benefit of a low base. Post that, for FY19, would it essentially be a realization-led growth, and therefore would these numbers taper off from this high 70-odd% revenue uptick that you've seen in the first half?
See, in the next, let's say, if you're talking of let's say year March 19, it'll be a mix. There will certainly be an additional growth due to volumes. We do see some easing of needle coke's situation happening over the next 12 months. So we do think that we should be able to produce more. We do think we should be able to get more needle coke. And the pricing should be, I mean, the average pricing, let's say in 18-19 should be higher than at least what we are having right now, because we are still suffering with the impact of the annual contracts, as we just spoke about. So our average prices, as I said, in April-June quarter was 100% old prices, which obviously had a big drag. And in the current quarter that we just announced our results, that share has come down. So we have started selling now at a part of our sales at higher prices, the spot sales as you call it. And that number will keep increasing. So it will be, I can assume very easily that our average prices should be higher in 18-19 compared to this current year of 17-18 on an annual basis. So it'll be revenue based as well as volume based.
So I have one final question, sir, since you've described the sweet spot, but the trapped sweet spot that you are in at this point in time. You've stated that you are confident of being able to maintain this huge jump in margins, or maintain margins at this elevated level over the course of the next several quarters. And that's entirely predicated on the back of the shift to selling in the spot market. Do you see anything disrupting this margin picture over the course of the next few quarters?
See, for the next 2-3 quarters, I really don't see that. I mean, I can clearly see, based on whatever discussions we are doing right now for the next 6 to 9 months. I see the prices, if not going up, we should be able to maintain. And as I said, as we start depleting more and more of our old price orders, our average keeps going up. And so I think the current margins that we are talking about, we should be able to maintain, if not improve. Now, it's very difficult to say how much improvement it could be, but my guess is that it is safe to say that at least we'll be able to maintain, if not improve.
All right, Mr. Jhunjhunwala, we appreciate you joining us this morning, and thank you for that insightful conversation on what's going on in the graphite electrode industry.